Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin. Dennis Dick here as well, but he will join us a bit later on in the show. Reason being, we got a lot of volatility in this market. We're not done yet. So much for that V bottom, maybe more like a W bottom. We're going to talk about all the carnage in yesterday's market, the sell-off in tech, the sell-off in retail, though that has more to do with earnings this morning. The rotation into defensive names. We'll take as many questions as we can in the chat because we have a lot of movement in this market. Our guest today, great day to have him on, Nick Chahine, joins us every Tuesday. He's the author of Create Income with Option Spreads. He'll give us some options trades for today's market. Joel, what is the word here in the S&Ps in the overnight session?
Got a lot of red here, Spencer. Your closing price was 96 and a quarter. Opened up right there, went up 2 ticks, and we've been pretty much steady trickle down. Pre-market low 26.62. We're trading a couple points above that, folks. To be honest with you, I see no major support for another 30 handles. 26.33 and a quarter was our October 30th low. That would put us right in with our average daily range, right around 50 points. So that's a target on the downside. We'll see if we get there. Crude trading in the red by 35 cents at 56.85. A vicious intraday sell-off yesterday, but now just trying to get back in the 57 handle. We have a gold up 40 cents here at 12.2570. Silver pretty much flat here at 14.40, and Bitcoin much closer to
Not looking good.
4,000 and 3,000, down $437.50. These are the Bitcoin futures, 53.65. Man, oh man, you took out that support level at 6,000, and that was just a
good night.
A trade
Goodbye.
of trades. I wish it was easier to short. I guess I should have been. Well, how's that GBTC looking? I guess you could have shorted that. I'm not sure what the borrow is on that. I know someone in our chat. Ooh, $5.40. So just a lot of red here, Spencer, and for a lot of different reasons. Let's. Where do you want to start?
Oh man, let's start with Nvidia because Dennis was tweeting about it last night. I was looking a little bit this morning. Over the last month, Joel. Over the last month, I filtered by mid-cap stocks and above. There are 3 stocks that have performed worse than Nvidia, 3 mid-cap and larger stocks that have performed worse than Nvidia over the last month. They are Aurora Cannabis, GE, and PCG. Those are the only ones that have performed worse than Nvidia in the last month. It is down as of the close 36% in 4 weeks.
Uninitiated 2-for-1 stock split here, and I think maybe you'll get some capitulation. I don't know how many days we could say that before it finally happens. You've just trickled down. You're trading at the lows of the pre-market session, so we'll use that as a guide. 136.71. We're 60 cents away from that, so that's what you use. If you could somehow get to that area and hold, or maybe buyers step up at 137. That is another area. If not, you just have to use half and whole numbers. Unfortunately, you had a month. Well, 138.58 was your low in July, but July of this year, or was it this year?
Wait,
last
that's
year.
last year.
Last year, under your 138.58 low, you have 102.31. And this is based on the monthly charts. So I bet you if you come in there and do some weeklies, you can find something. But there's just a big old bar that you had in May of 2017 where the stock went from 104 to 144. The low that month was 102.31. And as we talk about, these stocks, when they go quickly up through areas, they come quickly down through areas. So we'll see if it will find support today ahead of 102.31. But The only number I can give you there is 136.71. That's your pre-market low.
When you don't see a lot, like when you see a stock move really quickly through a lot of levels or either up or down, what does that tell you?
It tells me that people are just selling and no one's willing, the algos are not willing to step up and buy the dip. They're selling the rip, easiest said enough. Shorts are just pounding it too. They're just loving it. And until you get a big, people covering big short positions or values, it's just, I guess the only thing would be wait for like a double bottom or something. If you want to get interested in these stocks, let's say you make a low today, 136, low the other day, 136.5, you get a little pop and then you got an area to lean on, but you just can't lean on one low. As you can see, if you were leaning on yesterday's low, 144.63, boom, you're selling your stock, $7-8 lower. So needs to get up to 144.63 to fill the gap. Pre-market low 136.70.
This is bad. This is like the most loved stock of the last like 2 years.
And now it's the most hated.
Oh, it's in 3 weeks, 4 weeks.
Momentum.
A little more than that.
Yeah. I mean, momentum on the downside can just dwarf momentum on the upside here. And if you don't have, the mentality of the buy the dip and then sell the rip, that's what you're kind of going to have. It's, it happens. And what were they? We're going to be big in crypto, right?
That's what they were saying last year.
Right. Oh man, they're building all these chips for crypto mining. And look at that. We're down $422. So I don't know much about the chip market, but I could just tell you, this is a bear market in the stock. And if you want to try and take a shot on the long side, like someone says, would you take a contrarian long here or wait for 106? I'm not taking a long. And man, if it goes to 106, then why won't it go to 100? If it went to 100, why won't it go to 90? If it goes to 90, why won't it go to 80?
Well, the bottom's got to be in somewhere.
No. Why does there have to be a bottom? There doesn't have to be a bottom.
Okay. I guess you're right. The bottom.
All right, enough of that. We've taught this stuff.
All right.
Let's move on.
All right. Well, good point there in the chat there. Square has to be right there with Nvidia. Lots of stocks were down yesterday, but another huge down day for Square. Same thing.
High value, you get high valuation. You're taking out the low of the move here. I'll just go to your monthly chart again. And 46.50. That's $12 away. That was a monthly low. You're actually opening into your May 31st low, or your was it your May low or your June low at 58.28? So keep an eye on that. Trading right around there in the pre-market session. If you've been waiting to cover a short since June, there you go, 58.28. That's the number in Square.
Crazy how fast I can turn with the most beloved stocks from the past couple years or so. Let's go to FANG here because the FANG stocks officially, I think, reached bear market territory yesterday. Facebook, Amazon, Netflix, Google. I guess we'll start with Facebook here because it is the F and FANG. But I just want to give us some levels on these four.
Well, Facebook, it's just been getting bad news after bad news, just after bad news. And you get an earnings pop, and that lasted 1 day. So let's see, you're trading down in the pre-market. Pre-market low 128.60, not getting a big bounce. But if you look at the 15-minute chart here, someone's lurking here, buying at 128, 129, but maybe patiently bringing in a short in the issue. Then you go to your monthlies, and I got nothing. My next monthly low was at 115.51, but it all started with Facebook with, what was it? Was that a couple months ago?
Cambridge Analytica? That was back in like April.
Yeah. And then it had the bad earnings reports, and, they changed their model, and I guess it's not working so good yet. But
yeah, I keep having to go to the weeklies and monthlies because there's no other way to put perspective on these things because they haven't been down this far in so long. What about Amazon here?
Amazon here. Let's see. It is trading down $46.30. What will we be keeping an eye on here? We are $12 through the October 30th low. So 14.76. If you're looking to buy that low, you got about $12 price improvement. But I think until you get back over 14.77 here, that was the low of the move. more downside here for Amazon on the monthlies. Nothing there. 1352.88 was your April low. But you can figure with this one, I don't know how people trade it, what kind of size you trade it, but 1460, 1455, 1450. I mean, because it's going to whoosh down through these levels and then turn around. And if you're not buying it on the way down, then good luck scrambling buying that thing on a 4, 5, 6 point spread. But folks, if you have targets in these stocks and you have a firm target at 1470, let's say on a short, it's trading at 1465 in the pre-market. If you have a predetermined target, man, just take it. I mean, because there's going to be rallies. Don't get too greedy. If you have good risk reward ratios, you get your targets, then you got to take them and move on to the next swing trade or whatever your style of trading is.
And I guess same story here for Netflix and Google, right?
Netflix, which I was bearish the whole way up and was wrong about that. It's well under $300 now, down 861. That closed weak. That closed on its low of the move, which was 271.21. So need to get above that for any kind of a rally. And on the monthly charts, let's see here. We are through the 275.90 low. According to them, I guess I should change this to weeklies here. Let me adjust this chart because I'm giving you guys monthly levels, and I just don't, I don't want to give you a level that's far away. So I'll go to a weekly. Weekly doesn't tell me much either. 249 was your low in February of this year.
Man.
That's not that far away. That's $13 away.
All right.
250.
We found one. All right. Not a good day to report earnings. So it's not a good day to miss, but really not a good day to just report in general. So let's just start with, let's go to retail because a lot of retailers we have this morning. We had L Brands after the bell yesterday. This is not great. Well, it's not great for anyone here this morning if you're in retail. So L Brands Q3 adjusted EPS 16 cents, beat the estimate by a penny. Sales 2.77 versus $2.7 billion. So a slight beat on both the Q3 numbers. The Q4 EPS guidance came in line, but they cut their quarterly dividend in half from 60 cents a share to 30 cents a share, and that will do it.
Yeah, GIF rally here. I don't know if that was like some same store sales or something. Got up over 37, down $3 here. Trading at the lows of the pre-market session. Pre-market low 31.10, trading 40 cents above that. And let's look on the dailies. 31.37. That was a low that you had back on October 30th, and then 30.61. 30.05. Now, this one has some daily levels coming into play, but also you can look at this if you look at the rally that it had. Has a lot of green candles that you could cut through here, but hopefully, or I own it, but hopefully it won't take out that pre-market low, but a lot of pressure on it this morning.
They also raised their fiscal year EPS guidance, but I guess they just don't care, do they? It's just one of those days.
Yeah, I mean, in this kind of environment, you get Target traded down, it's just like you said, a tough day to report.
All right, let's go to Target now. Reporting here this morning, Q3 EPS $1.09, missed the estimate by 3 cents there. Sales $17.8 billion is in line with estimates. Fiscal year EPS guidance coming in line. Comparable sales growth for the quarter at 5.1%, which is in line. Everything here in line, but that won't cut it. Nothing will cut it here.
Yeah. I mean, they could have, no matter what,
they could have blown it away.
This one, I kind of like 70. I know we're trading at 69.85, but if I look at some of the weekly lows here, I see 3 weekly lows right around the $70 area. So, man, that could be a nice target. Underneath that, you have a weekly low in May at 68.33.
Here's how we know nothing matters here this morning, because let's look at Best Buy. Best Buy was out just around 7 a.m. this morning. Their earnings, Q3 EPS 93 cents, beat the estimate of 85 cents. Sales $9.59 billion versus $9.56 billion. So beats on both the Q3 and sales for the EPS and sales for Q3. And they raised their guidance, their EPS guidance for the fiscal year was raised by 14 cents on the low end of the range, and their Q4 EPS guidance was also came in. That's in line. Sales guidance was in line, but an EPS raise, and that's a good report there. A beat, and an EPS raise doesn't matter.
60-60. You did get a real overshoot here. You got down. What did someone traded? 58.80 here. Someone traded 300 shares at 58.80. But since then, your low's been at 60.02. You're a buck away. I see a monthly low right at 60.60. So there's a nice round level. See if they can hold $60. After that, I'd be looking for 57. 56.80. That was your back in the first week of December. That was your low at 56.80, and your close in November was 57 even. So if you're holding out under 60, I'd be looking for 57.
Same story with Kohl's. KSS Q3 EPS 98 cents versus 96 cents. Sales 4.63 versus 4.36 billion. So a beat for the Q3, and again raising their fiscal year EPS guidance. This one by 30 cents from 5.15 to 5.45. On the low end of the range. Nothing matters.
Straight down, you have a step down seller here. You every 15-minute low here since the 7:15, really since the 4 o'clock open. So just wait for that string to break. You have lower highs on every bracket. So until that string is broken, you got pressure on Kohl's here. Let's see. We are below 64.87. So I'll call 65. You got to have some general areas here. $65 area was support in early June. The only bad thing about that is the next weekly low back at the end of May was 59.85. Couple weekly lows at 60. So $4.50 away. Why not, man? You can get it on the way down on a flush out off the open, maybe some big sell stops. I see 60 as the next major support level here. I really don't think we're going to see. I'm giving all these levels that are like $3-4 away, and these stocks are already down 6 or 7. I mean,
they're going to hit them in like 20 minutes.
Man, I don't think so.
Okay,
I don't think so.
Here's one interesting because it's just out a few minutes ago. TJX Companies reporting Q3 EPS 63 cents is a 2-cent beat on the estimate. Sales 9.8 versus $9.5 billion. So again, a beat for Q3. The Q4 EPS guidance came in line. So beat in line, and what do you got?
I got a pop, and someone was so happy to see that thing at $50 that it just popped up there twice. I mean, this thing has been absolutely massacred since Macy's really got things started. When did Macy's report? Boom. Macy's reported on November 12th, and then TJX. That really got. I mean, is no one going to buy
Macy's? Macy's was the 14th.
Was it 14th?
Yeah.
Okay. Boom. I don't know. You got a couple spikes under 47, and it recovered back to 48. Let me see on the weeklies. The weeklies, 47. Wow. I see a lot of weekly. This is interesting. You got 1, 2, 3, 4, 5, 6 weekly lows in TJX at the $47 area. I would say out of all these stocks that are in the support, I'd say right now I'd have the most confident in 47 here in TJX.
You're talking about from April.
Yeah, you see that?
Yeah.
That's all weekly lows too. So that's just, and also you have to understand, like, even if institutions are out here and they've been they're waiting to buy these retailers, they're not buying it all today. It's going to, they're going to take them, 1 day, 2 day, 3 day, 4 days to buy these positions. And they were doing it at 47 in May and June. We'll see if they do it again today.
Does a monthly low give you more confidence than the weekly low, and a weekly more confidence?
I'd rather see like all those weekly lows in the same area
than like daily lows, for example.
Yeah, exactly. Okay. And a lot of times, if you get confirmation when you see something like that, because over that time period you had 4 monthly. No, I'm still on the weekly. I guess now I got to have weekly and monthly charts up. We got to be finding the bottom somewhere. All I have to do is look at weeklies and monthlies here. A monthly low, 47.10 marked the monthly low in July.
It just seems like we're in pure defensive mode today because look at, a stock like Campbell's, a food stock, which also had earnings this morning, and they like it. Let me pull up the CPB chart here and give you the numbers on Campbell's Soup. Q1 adjusted EPS 79 cents versus a 71-cent estimate sales, 2.69 versus $2.64 billion. So beats on both numbers for Q1, and they reaffirmed their fiscal year EPS guide and sales guidance for that matter. So just reaffirmed guidance as they transition. They had the activist activity from a few months ago, and they're reorganizing the company. But just an EPS, just an earnings beat, and reaffirmed guidance. And look at that.
Clear rotation here. Pre-market high 41.15. We backed off at the $40 level. I'd be more interested in this in a pullback. You did have sellers at the 39.80 area 4 days in a row. So if this pulled back under that, fill the gap from yesterday, 39.75. You think if it can't hold in there, 39.5, 39.75. You have the close from yesterday way down at 38.45.
All right, we are just like you guys. We're trying to figure out like what's happening this morning, just as you guys are. And so I want to look at Hormel because this is just confusing to me. So if this is a day where we're rotating into defensive names, what gives with Hormel? That's also a food stock. They're also reporting earnings this morning. They also beat, although they missed on the sales. The EPS beat 51 cents versus 49 cents. Sales 2.52 versus $2.57 billion. The fiscal year EPS guidance they gave was in line. The sales guidance they gave was in line. They raised their dividend from 18 cents a share to 21 cents a share. And what?
Well,
riddle me this, Joel.
Pull up the chart, though. Pull up the chart.
Okay, I got it up.
So what's it been doing going into the report?
I didn't look at that. Okay, I've got a daily up. Oh, it's ripped.
Yeah, it's an all-time high. Figure people will just eating spam here. That's the only thing they're going to be able to afford. So this thing has gone from it's contrarian a lot of other food stocks. They have to make more than that spam though, don't they? What else do they make?
They do like turkey and ham and I don't know.
I mean, it's just
pepperoni.
had a hell of a run, and you have a hell of a run into a report. This kind of market, food stocks have generally been in the gutter. Boom. People taking some profits here. You may find some buy the dippers in this one because if you've been shorting this thing, you've been taking a lot of pain. Not a lot of volume is trading here. 42.62 is your pre-market low. And let's see here. Taking out the 41.58 could be another target on the downside here. That was your October 29th low. Below that, it drops to 40.61.
There is one retailer sort of bucking the trend here this morning, and that is Urban Outfitters because they reported earnings after the close yesterday. Q3 EPS 70 cents versus a 63-cent estimate. Sales on 973 versus $969 million. So beats on both the top and bottom line for Q3 in URBN, and it was up a lot more, but it's getting some back.
Just selling off, a little bit of a relief pop here, trading up 90 cents. The pre-market chart doesn't make a whole lot of sense to me. But let's see if we can take out the high from Monday at 37.16. Friday's close is right there at 37.04. So very important to take out the 37, holding the 37 handle, and maybe destined for closer to 38. 37.83 was your 2-day high. If you start to repeal here, low of the move was made yesterday at 34.85, and your low close of the move was made yesterday as well as 35.61.
All right, we'll do one more on the earnings front, and then we'll get some questions from the chat. Lowe's, LOW, reporting this morning Q3 EPS of $1.04 versus a 98-cent estimate. Sales 17.4 versus $17.34 billion. So beats on the top and bottom line for Lowe's in the Q3. The Q4 EPS guidance was a little bit light. The sales was up 4% on a year-over-year basis for LOW.
LOW. Oh, that's only trading down $7 here. Street leaning the right way into this report. Closed near its low for the session. Why not hold out for $81 in this one if you're super bearish? two monthly lows, one at 81 or weekly lows, one at 81.31, one at 81.16. So beyond the pre-market low, get another little flush out. I'd be liking this one in the lower 81 handle. Dennis wants us to take a look at Twilio and
Isn't it the same story as these other high flyers?
yeah, but that one just gave you just an absolute ridiculous report. Boom. I like $70 in this one. You're filling the gap from the ridiculous earnings run up. Before the report, you had two lows, one at 69.96 and one at 70.18. That's a $1.88 away. There's your first area of potential support here for Twilio.
Okay, I want to do some stuff from the chat here. Someone here brought up NIO. Let's look at that one. That is supposedly the Tesla of China. I know it's got some activist attention. It's got some attention from Mr. Left over at Citron Research. He is
bullish.
He is bullish. Yeah, he said he's got a short-term price target of $12 on this one.
Okay. Got a little pop. I mean, this is a newly issued stock here. Had its initial run up and then fell on hard times. But the weeklies are telling you that you need to make a stand here over $8. I see some daily and weekly highs right around that area. Yesterday's high, 821. So I wouldn't be looking for it looks good. The chart doesn't, look that bad. You're only trading down 20 cents. But for me, getting above 8 and closing above 8, that could signal another leg higher for NIO. And you could figure 50% retracement. What was the IPO low? 535. 14.9, 4.5. Oh, you're still, you could get up into the $9.5 area, and that would be your 50%. But not a bad looking chart. Rounding bottom here. Not bad. Like to see it hold $8.
Joel, here's one that's on my radar.
You mentioned this yesterday, right?
What?
The allergy stock?
No, that's not where I was going with that. No, okay. I was going to Kraft Heinz because on a defensive day, you think this would be up a little bit more than it is. It's early yet. It's early yet.
It's up 6 cents. You got you had to lower the move at 50.41 and seem to be finding support here at the 51.50 area. Those are your last three lows. So if you're looking at a little bit of a swing trade here, I do see some pretty good support here at 51.50. But where are the highs? Above getting the 53 handle. You got two highs right at like 52.85. So that's your resistance. But I like the support better at 51.5.
All right, let's look at, here's one from the chat, the YouTube chat. Let's look at Starbucks. Haven't looked at Starbucks in a while. Are we just selling everything today? Is that what we're doing? We're just going to sell everything?
Holding up. Only down 3 cents. I can't tell whether it's bid or offered here. Boom. Tight range yesterday, 68.47. It's hanging green here. 68.50. Made a high of the move just under. There's like sellers are stacking up here. 68.50. I see a couple daily highs, and then the 69. I see a couple daily highs. So sellers out there, but they don't seem to really only want to do it on strength here. Green on the session. Yesterday's low down at 67.23.
And Dennis is making a good point because he trades the Qs. Whenever he trades tech, he'll trade the Qs against it. But we said this before. You got to look a little bit deeper because sometimes there's not always we think of the Qs as a tech fund, but there is some non-tech in there. This is one of those non-tech stocks. So you kind of maybe account for why, if there's a discrepancy in the relationships or the correlations between tech ETF and the top holdings. Why is that? Well, maybe this is one reason why. Starbucks is also in that fund. It's like what is it? It's like a tech/consumer fund. I'm not really sure. There are probably pure ETFs to trade for tech if you're looking to arbitrage the two. But we know that's what Dennis uses. What about CRM here? Speaking of tech.
Yeah, let's take a look at Salesforce.com and trading along with the rest of the others, down 3.5 points. Big, ugly red candle yesterday. just skimming here, just above the pre-market low. 1691, you're trading at 1745. And let's see if I can find on a monthly. I don't see anything down to 114. 113.61 was your April low of this year.
All right, they're asking us to cover one tech stock that is holding on to gains today, and that is Pure Storage, PSTG, because they had their earnings after the bell yesterday. Q3 EPS 13 cents, up from 4 cents a year ago. Sales 372 versus $367 million. This is a recent IPO, I believe. Let me get this symbol right on the chart. PSTG. Did I get that right? Yeah, I got that right. Okay. The Q4 sales guidance coming in line. The fiscal year sales guidance coming in line. So I don't know.
Well, it's up 72 cents. That's the good news. The bad news is it was up quite a bit higher, up to almost $20. 19.99 was your pre-market high. So 20 is a big level here. We're down at 18 and a quarter. We're trading at 18 and a quarter. There's up 72 cents. So, man, oh man, you can not even at yesterday's high yet. So you can, for this one, if this rally is for real, you got to take out, bust above 19, and then another pair of highs at 19 and a half. On the downside, still just leaking here. Maybe wait for the close if it continues. Closing price 17.53.
All right, Joe, where are we at in the S&Ps? We just had building comrades. We know that doesn't usually move the market a ton.
Nothing. We are 62.75. 61 and a half is your low. As I said, I can't find anything to lean on here for another 30 handles. That's 26.33 and a quarter. That was an area that we made a low after the 26.03. But right now we're just seeing where that pre-market low is and see if it will hold up off the open. Dennis is looking for a washout off the open. That's why we'll keep an eye on the pre-market low in all these stocks, see if those levels are reached or at least matched early in the session.
All right, 8:32. We have a couple minutes till our guest, Nick Chahine, will join us today, and he'll be on with us for, I have a feeling, for a while, because we got a lot to get to with him. But in the meantime, we'll do one or two more before we grab Nick. Looking at the chat, let's look at Merck, MRK.
Okay. I will do Merck, and then we'll do financials, and then we'll go.
Okay.
Strong stock. New high of the moon, not quite an all-time high. Boom. You want to see it get above the close here. Your high was 76.61. Your high close of the move has been 76.35. So there's some targets. And then this one just, not quite back up the all-time high. I know because I sold this stock around 80.85. That was like 100 years ago. But see if you can. This one will give you a double top or a triple top or something to lean on. But right now, needs to get green on the session. And then the financials are holding up okay, except for Goldman Sachs.
I don't know.
Boy, I'll tell you, these are looking at the XLF here. I'll just do that for abroad. This thing ain't going anywhere until we bust above 27. I see all these. You had a couple daily highs above it, but then last 2 days high 26.90, 26.91. A little bit, I noticed Bank of America held up for a while, but it just cratered near the end. You do have some dividend on the stocks. Maybe, I don't know, higher interest rates really didn't do the trick for it, but keep an eye on the closing prices. A lot of these stocks, they may get a washout off the open, and then real quick, you get up near the close, and that could be a potential area. I have a little bit of a Bank of America long. I would love to see the closing price.
One more, and I want to do this right now before we grab Nick. Ross Stores just reported earnings 91 cents versus 90-cent estimate.
It's got to be down $800.
Yeah, exactly right. Sales in line, $3.55 billion, and they raised their guidance. EPS guidance was raised from $3.92 to $4.15 on the low end. Doesn't matter. Why am I even giving you the numbers?
Yeah,
what is it? What is it?
Trading at this hit 83.80, trading at 84 even. I do see a weekly formation, but that is not down until like 83. I see a monthly low at in July, a weekly low at 83. Then after that, it drops to 81.5.
All righty. And on that note, I am calling Nick Chahine. He is the author of Create Income with Option Spreads. He joins us every Tuesday to give us his favorite options trades to make. Nick, how's it going this morning?
It's going okay, given the circumstances.
What circumstances?
The sentiment, how everybody just flips from one side of the boat to another in just mere hours, especially when not a lot of new things happened, except for rhetoric and sentiment. But the hard data is still the same as a couple of weeks ago, etc.
You're right. So which side of the boat are you on now?
I'm on the side of the charts right now. So regardless of what I think of a value of one company or another, regardless of how attractive it looks, if I sold puts or not, my message has been only take tactical trades in the short term, meaning if you see a specific reason to do this or that, fine. But the overall thesis still is defense. It's been defense for weeks because I don't know what's going to happen. I don't know how the leaders of the world are going to act into the end of the year. So if I have a long position that is of size, I've been in defense on it one way or another throughout the whole time. So if I sold puts in Apple, I am in longer term, I'm darn sure owning puts for the shorter term. I call them sacrifice puts. So if I don't want to own the shares and I get assigned a stock, then I have my right to sell it at X price.
All right. So give us some names that you're looking at today.
Okay, so all the mega caps. So I look at Apple.
Sure.
I remember, yesterday was the first time, maybe I should say this week, not maybe specifically yesterday, but I heard it yesterday, is the first time that I heard margins as a problem in a big way. I remember that before it split. And that was when everybody started making jokes about it. And it fell to the lows then, and that was a bottom. And then from that, it did a whole big, like a rounding bottom type of it took a long time to recover from it, but when it did, it recovered in a fierce way. So Apple would be one, even though it's the least attractive to me because of the leadership. Amazon would definitely be one. So everybody's surprised, oh my gosh, it's falling 50, 70 bucks a day. Well, that's what it does. It's a momentum stock. It leads on the way up and it leads on the way down. It sees 30-40% corrections all the time. So that doesn't concern me. What would concern me is if the leadership style change, like Facebook. Facebook, the leader style changed. I mentioned it, I'm pretty sure here, is that, okay, the potential in that stock is incredible. Having a billion users, more than a billion users engaged every day on your platform for hours at a time, and you have other platforms with a billion users that you're not collecting money from, is a lot of potential. But the leadership is almost socialist, and it's crazy the way they're running this company because they're stuck in the middle. They didn't pull a Steve Jobs when they were accused of all this and that. They should have said, no, we didn't do anything wrong in the Analytica thing. They did, and stand the hard ground there. Instead, they cowered and they said, oh, my bad, and let me fix it. And it's costing them $1 bazillion to fix it. So that's pretty scary. So that's the least attractive. Google, I like. Twitter, I like from a technical basis. I don't like the management there again. So you just do your homework and see what you like and what you've been tracking for years, and entry and exit points. So the momentum stocks like CRM, it's not surprising as to what they're doing. They're running fast, but they're momentum stocks. That's what they do.
That's what they do.
So yeah, so they lead up and they lead down. So when they're running, they look like they're going to the moon. When they're falling, they look like you're going into an abyss. So here's CRM. That's a weekly chart. I did have a downside pattern on it, and it's now a little bit lower than my target, but it's going there. So in general, the markets almost look kind of the same. The problem is we test the neckline long enough. When it breaks, there's a target of sorts just from the charts. And in this case, we have another neckline before the target is fulfilled. So if we do lose 2,600 on the S&P E-minis, we could see the 2,400s. And then you would start hearing, okay, this is the halfback from the Trump election rally. So if you go back to November and you measure if you believe in Fibonacci, that would be about halfway. I eyeballed it this morning. So the rhetoric is going to probably take us there. I'm not sure, but in the meantime, I own puts in defense. And I did have some tacticals that got broken. On Friday, it looked good for a rally, bought some calls. Everything was lined up nicely. Those calls are broken. So I would exit for a loss and stay in my puts as defense for my longer term trades.
But when you say you like an Apple or a Facebook or a Google or whatever, an Amazon, how would you play that now?
Okay, so if I'm a put seller, I'd start looking at the put level I want to own the stock at. So I see a big level in Apple around 175. And just from the action, to dummy up the noise, I would go to a weekly chart, because if this is going to be a longer term trade, I don't want to pick a chart that has a whole bunch of noise. So I would look at Apple, and I see there's a whole bunch of recent trade, and on the weekly chart, somewhere around 175-ish. So it's not a hard line in the sand. It's a point of control of some sorts from the price volume perspective. So 175 to 165. Technically, it probably could go to the 150 something. So I pick a level, and if it's attractive to me, I can sell puts for income there. And if it does go there, hey, I bought Apple at a discount, I got paid to do it. That'd be one way. Or I could pick a level where I think it's going to stop and sell some put spreads, so I don't have the opportunity to get put the stock in a big way. I have a finite amount of money I could lose if I'm wrong. And if I'm not wrong, I've generated income out of nothing. It's hard to buy and hope with the calls. If I want to buy the company itself, it's even better than the calls, because the calls have a time element in them. Yes, it's an asset, but if things go wrong against you, then you're losing immediately and it doesn't come back. Whereas if you're losing with the stock itself, it's an asset that is not time sensitive. So it all depends on the style of trading. So for me, I like to sell puts. I'm not selling puts this morning because of the technical stuff that's going on. I just told you about the SPX and the S&P. So I want to see where the bears want to go with it. I'm happy sitting in my puts and see what happens. I took the pain on. I will take the pain on the calls of whatever trades I had going on from Friday. Trade broken, I get out. I don't turn it into an investment. That was a tactical entry point. So. Thanksgiving Day, usually they say it's a happy week. Not looking so unless the phoenix, the turkey's going to rise from the ashes here. It's burnt.
We're on the line with Nick Chahine. He's the author of Create Income with Option Spreads. He joins our show every Tuesday. Share his technical and fundamental outlooks on the markets, on companies. Nick, the way you're talking and rightfully so, you've been like, okay, I'm going to catch the dip here. I'm still in the bull camp. I'm looking to sell puts and, buy good companies. What would it take in this market here for you to say, okay, I'm done. I'm done on this. I'm a bear. I'm a flat out bear. I am not buying any more calls. I'm not selling any more puts.
I don't know what you heard. I just told you we're going to 2,400, and I said I'm staying in my puts and I'm closing my loss on the calls, and I don't buy calls because of the time issue. So
you are.
Exactly,
so you're told. So,
I'm not a bear on the thesis. The price action is totally bearish. You had I just posted Amazon, for example. Let's pick Amazon. I just posted the Amazon chart. If you pull that up, there's a green line going down from a Head and Shoulders that I tracked that I said if we lose 1650, we could be headed to 14 and change. And guess what? That would trigger 1,200 and change on Amazon. So it's been in my charts and in my videos of every week. This is the technical pattern that's going to happen if we don't bounce. We're bouncing, that's great. But once you lose that neckline, it becomes the trigger for the technical patterns to trigger. And fundamentally, I think we're not extended. Google, what is it now? 25 PE. This is trailing. I'm not projecting new stuff.
Right. Okay.
So at some point, unless we're crashing the whole market, this too shall pass, as they say. So we have three people in charge of the global economy right now. And believe it or not, it's going to trade as one thing. We have President Trump and President Xi in a battle over tariffs. They both have giant egos. Neither of them want to break their own countries. Trump wants to declare his victory on the economy, so he's not going to willfully kill it, regardless of what his intents are. Same for President Xi. He doesn't want to be the one that isolates China from the world, which this week, the rhetoric, that's what I hear. Plus, you have the Fed on the other side against President Trump. and they're in a battle of wills as to who's got a bigger say here. And I bet you anything that the Federal Reserve does not want to ruin the hard work that they did for 10 years to get the economy out of the '08 debacle. So they were the ones that got us out of there with their monetary policy, and they tried to hand it over to fiscal, and we messed it up. So there's not going to be spending. So the government side is going to be hampered. So the Fed's not going to willfully tank the economy, which they tried. They worked so hard for 10 years to save it. And this week, or last week, I forget when it was, when the Friday, the vice chair came out and talked, he said data dependent 5 times that I counted, maybe more. And he told us basically what the Powell is not said, Jerome Powell, is we're data dependent. He was the quasi statement. Unless they don't talk and unless they're not on the same page, which I find that shocking, the Fed is watching the data and they're not going to keep ratcheting up the rates and invert the curve on purpose. That's my opinion. So this too shall pass. Meanwhile, the patterns are bearish and the price action is totally bearish. And if one is reading my write-ups and hasn't seen that, then they've been skipping pretty important parts of it.
What about like the value stocks here? I mean, you have one food stock, Campbell was trading up. I mean, is that if you're going to go to the well, do you buy that? There is rotation. No. You don't. Go ahead, Nick.
No, I don't. In fact, I shorted Clorox on that perspective. I said, okay, so if the market is tanking and Clorox is rising because it's a safety trade. Nothing is a safety trade in the crashing market. That's my experience. So Clorox will eventually fall. Coke was in the news yesterday, but that was a technical pattern that was breaking up. It just happened to be around this time. So people are mistakenly thinking, okay, I can hide in Clorox. I don't think you can hide in anything if doom is coming. When have you seen doom come and a stock rise to new highs? So in my opinion, if I can't buy Apple for an upside move in the markets, I sure heck am not going to buy Clorox at these inflated levels because I'd rather sit on my money in cash if that's the case.
All right, so let's do a setup here in a trade, and we'll follow it for a couple days. And it's something that I've been dead wrong on, using your theory that a sinking market sinks all ships, and I've been trying to short this Procter Gamble here. And it's been, a gap and go since earnings. I've come out alive a couple times on it, but what should I do? The great thing would be like sell some calls, right? I'm sure there's some decent premium in here, but give me a setup here for Procter & Gamble on the short side.
Okay, so I see why you want to short it. Maybe we've talked about it. Now I'm looking at it, and this looks familiar. So.
I wanted to short it at 88, 89, 90, 91, 92, 93. Right. So for me, I wrote a note to myself. The high close of the move has been 93.82. And so that's near a whole number. But give me your setup and I'll see if I can follow it for a couple days.
Okay. So you got to see what caused it to go there. I think there was a neckline from an accident scene from February, the February correction, somewhere halfway into February. I think actually February 2nd, it fell off a cliff, but he had already started falling, right? And then on the way up, that level, which was 84, roughly, give or take a few pennies, was a neckline that was cup and handle-ish in pattern, and it had an upside roughly $7, $8, maybe $10 even. So from 84, 94 would have been the eyeball target for it. That might match up with your levels, but more importantly, the whole zone around 92 is the accident scene from which it fell back in January. So they just got back to where they were. So if I wanted to short it, I'd just buy straight up puts out in time and wait for it to happen. I wouldn't want to sell calls, although if you're brave enough to do it, you can maybe call spreads to limit your exposure there. But this is one where I'd give myself time, buy some puts and see what happens. There's a big gap in 84.
I've been waiting for it, Nick. I've been waiting for that one.
I don't blame you for shorting it because it looks extended, but know that there was a $10 push from the what I say that level was, like 82.
Yeah. Yep.
And that would have been just a technical, actually a whole bunch of mini ones along the way. Like I could argue that 78 was one on the way up that would have targeted the 84 area. And then once it got to 84, it launched another one. Kind of like the opposite of what's happening in the markets. We're going from one inverse cup and handle or head and shoulder pattern to another. And same with Amazon. I posted a chart earlier. There was a pattern already unfolding, and then another one could trigger, actually today should trigger down to the 1200s. So it just depends on what you're trying to protect. If you have Boeing, Caterpillar longs, etc., I would just protect via puts in the DIA, for example, because they tend to move together. If you're heavy in the tech, I would protect using the Qs or the SPY for a general blanket, grabbing everything. So one thing I don't do, I don't just sit there and hope it works out.
You're proactive. Yep. And where are you buying Bitcoin?
I heard Tom Lee this morning. So this guy went from a genius on CNBC to them giving him advice. When are you going to give it up? Kind of like what you asked me today. So I don't know anything about Bitcoin, and I know the charts was awful. It had really good setups that it foiled back when it was something like 7,400. I did a couple of videos for fun. And, the Bitcoin trade is unfolding kind of like the Amazon trade. And if the charts are right, it should be in the twos. That's my opinion. I'm not calling for it, but this technical pattern is unfolding, and I'll post it. I'll call it BTC here. And it's just, they lost a neckline or two or three, and here we are. The weekly floor of 5,800 roughly is lost, and this is just the next step lower. There was a small consolidation period around 39, maybe 4,000, but if that's, I don't know what it's doing this morning.
Yeah,
but
it's down. It's getting near 4,000. One quick one here for you, and someone just asked, where was it? Nick, hey, Twilio. That's what your last one. We'll let you go. Oh, I heard an odd there, Nick.
Yeah. Well, Twilio was, one that I traded a while back. I've told you the story there. So I'm going to eliminate the noise and go to a weekly chart, because I'll start with that and then see if there's anything to be told. Okay, so it spiked, and it was an inverse head and shoulder pattern, and I drew it. It exceeded my expectations, and with that one giant to 98. So if somebody bought it at 98, maybe they set themselves up for failure there. Well, now it's back to the neckline. Well, this morning it's probably lower, I don't know, but in the neckline area. So if I look left, there is a candle in August of 18, and that's probably a play, because that candle is exactly the inverse head and shoulder size. So that whole zone is interesting. Gotcha. And I would not sell puts below, unless they're below 65. Not to say this is going there, because that is the one giant candle. That's where that giant candle started. So from a volume perspective, there should be some support around 68, but the better support probably doesn't come until in the 50s, 55, 56.
Yeah,
57.
This is the one we battled on, and I had a bunch of egg on my face. I wish I would have stuck with it another couple days, but I said I was going to let you go, but we got such a good question in here from Troy Corp. I'm going to give it to you, give you a minute to, and then I'm really going to let you go. Nick, do you vary the amount of time you buy the options? And if so, what considerations drive your decisions?
I'm not sure I understand the amount of time I buy the options.
Like, how far do you go out? Like,
of course.
Yeah, that's
like
what
it's out in time.
Yes.
It all depends on what I'm trying to do. Like yesterday, I wanted to short somebody's earnings. I can't remember who it was, one of the Lowe's or one of those guys. I think it's Lowe's. Yeah, and it's just an event, so I go 1 week out.
Okay.
Max. I rarely do the same week. I rarely sell risk for the same week. I did sell some iron condors for this week, and obviously those are broken, so I'll close them for a loss. So actually, they're kind of evenish. I closed some yesterday because it didn't look so good. And it depends what you're trying to do. So if I'm fundamentally trying to catch a falling knife, I'll go out in time and go low. Like I can probably sell Apple puts for 120 for next year. And I'll be happy to own it at 120. But if I'm trying to tactically catch a falling knife in Apple, I would do it shorter term.
Okay.
If I'm trying to short this and that, I will do it shorter term.
Okay. We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads, giving us a tactical look at the market. Nick, thank you very much. And we have a good Thanksgiving. You stay away from those fires, and we'll talk to you next Tuesday.
All the same to you.
All right. 8:55 here. Got about 5 minutes left in our show. Joel, S&Ps, anything of note there?
We just, Dennis came on and he said, man, that these stocks should be lower. The SPOs are going lower, and that's just continued. The sellers have their foot on the pedal here. And let's, like I said, 50. I did not see anything down to 26.33 and a quarter. That was your October 30th low. When we started the show, we were 25 handles or 30 handles away from there. Now we're 20. Keeping eye, we still got 35 minutes to the open. So
it's incredible.
Yeah,
like this feels like the washout day. I think on some of these momos, I think they're gonna bottom here in the first, and this is my opinion, but it feels like the washout day. We've traded through this stuff before. I feel like some of these momo names are gonna bottom here in the first 10 to 15 minutes, and then actually maybe turn it around. I mean, Nvidia's been down for 3 straight days. It's down 50% in a month and a half, which is incredible. That's actually more than 50%. I said that last night, but it's down another 10% here. So it's like 55 or down another 6% here this morning. I would think, and obviously if you've got, and don't be trading on margin and stuff like this, because it's how you can blow out an account. But, if you're just trading, and you've been waiting for your opportunity, I think it might be near the open here today, but man, you've got to be cautious with it, and it's going to be wild, and it's going to be like throw up. But if you've been looking to get some money and putting some money to work, you've been sitting in cash for a long time, I feel like this morning is going to give you that opportunity here. So be very careful though, because it could just continue. Maybe it's going to be a washout. We have a different environment than we did 10 years ago when we were getting days like this, because everything's so ETF related and everybody's in the same stocks. And that's why you see stuff like Square down 11% here this morning. It's incredible. Square's down 11%. Twilio with that great quarter down 7.6%. I mean, you look at the Qs and they're down 2, and you think, man, it's a really rough day. You lift up the hood and you're struggling to find stocks that are only down 2%. I mean, let's just do the quick lift up the hood segment in the Qs. Let's go ETF. Let's look at the top components in the Qs just quickly for fun here. And this is, breaking it down and trying to figure out, what's, are we really fair value here? Or are we way below? Because pre-market doesn't always price it right. So you got Apple is 11% of the Qs. Apple right now is trading down 3.6%. So that's more. Microsoft is the next biggest component. It's 2.74%. So that's more. Amazon is down 4.38%. That's 10% of the Qs. So that's making up twice. Google, if you go to Google, which is now another 10%, it's down 2.5%. Facebook, which is another 5% of the Qs. These are top components, down 3.2%. So you're not even close. Now Intel is not quite. It's down at the Qs at 1%. While the Qs are down 2%, so it's helping a slight bit. Cisco's going to help a slight bit. So those are stocks that might hold up better, because there's 100 things that add up to the Qs for the ARB to work, and the ARBs work. So you got to think there's going to be some stuff in that index that's going to be up. You go to Pepsi, it's probably going to be up today. It is trading up in the pre-market. Something like that needs to go up because everything else is annihilated. Netflix is down 5%, so that's not helping. You can go into like a Ross Stores and you think, oh, sometimes that helps out, but it had earnings that's down 8%, so it's hurting you too. Nvidia, is another 1%. So think about the non-tech plays. Some of the food stocks are probably going to be higher because you've got Campbell's with good earnings and it's classic defense. But you look at this and you think, wow, we're not down nearly enough. And the Qs are down 2%. So one of two things is going to come back. Some of these stocks are going to start screaming back after the open, which I think is the likely scenario, or the Qs are going to just keep crashing. We're going to be down 4 or 5% on the Qs today. So I think we're going to have a wash. It feels like a washout here this morning. And this is, and obviously we haven't been in a bear market, in a long time. So, I'm even learning a little bit as I go along. but it feels like the washout morning. So I probably will start to buy some stocks with low ball bids in my investment portfolio here today. So if you're a long-term investor, I think now is the time to start striking. That is my own opinion, but I think, it's, not that I will be coming here and buying everything on margin, because this thing can get a lot uglier. But if you're overloaded with cash and you've been waiting for opportunity, I mean, look at a Facebook at 127. You get that in the lower hundreds, like maybe it gets down in a crazy washout in the 120, 115 area, some value there. Now, Apple, somebody's asking me about Apple. I own Apple still in my long-term investment portfolio. Yeah, it's down at 179. Yeah, there's some value there, but it's still a little bit of a one-trick pony. I think, in the 160 area, I like Apple better than 179. But, I mean, this market's incredible. The movement is incredible here this morning. It feels like a washout morning to me, especially
why
in some of these,
wouldn't you, if we've come down this far, okay, and we got, we had the recent low of the move back in October, you want to be patient enough to come down and see us test this low at let's call it in the spiders at 260 SPY. You think we've just come down too far too fast, and you want to lean on that as an exit? Or
I don't know. No, but I'm not looking at the spider. I'm looking at these individual Momo names, because this is different. You've seen a lot of stocks hold up, and do I want to go buy Procter and Gamble right now at $93? Maybe for a day trade because it's just defensive. But I mean, there's been so many things that have held up. I'm saying the rotation here from value or Momo to value is now overdone on the other side to a certain extent.
Okay.
I mean, that's what I'm thinking. Nvidia's down. For all intents and purposes, Nvidia has crashed in the last 3 days. We were $200 3 days, $135 after falling $90 in the previous month. This has crashed. At a certain point in time, these stocks, are still, market leaders. They're not anymore. But I mean, if they turn around, I think these are the kind of stock. I don't own any of these, like in my investment portfolio. I've been wanting to own some of these stocks. So I'm saying is, if you're looking, not look at that as a SPY. Okay. Am I thinking we're bottoming on the SPY and this is it? No. And I wouldn't be surprised, Joe, if we do test that 260, maybe even today. Like the SPY is only down 1.2%, which is crazy to me. I can't believe the SPY is only down 1.2% when I start looking under the hood here. And I see you got even conservative defensive names trading down. I mean, Procter & Gamble's down 0.5%. Like that's either going to turn around or the SPY is going to come down more, because if we looked under the hood in the SPY and it would take a long time with 500 components, I think we'd be shocked at how many stocks are down way more than 1.2%. So, and we're just looking, pre-market trading, and everything's changes quickly. But the ARBs typically come in. The arbitrage typically comes in after the open. That's when all the arbitrage bots come in, and everything quickly adjusts. That's why you see these violent moves on the opening prints, and you see these violent swings, because the ARB comes in, and everything is arbitrage now. Especially, a lot of, bots running it there. Everything always was arbitrage, but there's so much ETF arbitrage going on, which we didn't have 10 years ago. So you have to do all adjustments within each other. And when you see, so many different stocks, like Twilio, for instance, this is mind-boggling. And it's, again, showing you, we've been talking about sell the rip. And sell the rip has just been working. And here you had Twilio, great report. We were dead wrong. Me and you, Joel, off the report, thought Twilio, when it was like $75 before it reported, we were like, I wouldn't want to be long this. The thing took off in our face, goes up to $96, washes out every short in the whole world for the next week. And here it is. 2 weeks later, it's at 71. After a fantastic report, blowing away the numbers, it took 2 weeks and it gives it all back. Into it last night, blows away the numbers. The stock was trading up. How high did INTU get last night, Joel? Give me the after hours action. How high did it get?
Oh, it got 213.95.
Here you got a stock. I said this to my buddy at Bright last night. How long is this rally going to last? Because it's literally giving back all of its losses from yesterday, which was a horrible day for Intuit. And it's right back up into where the memory zone is. Every money manager is saying, thank you, I'm selling after hours. Gone. Sell the rip. It's gone. It didn't even last one day. It's gone. So, I mean, it's incredible how quickly they sell rips. And it's still a market of sell the rips. I'm just saying short term here, this feels like a little bit of a washout on the Momos. I think they're going to have a bounce here today. Just my opinion. I think they're going to bounce. I might be wrong. So, obviously, we don't know things. Nothing is certain. But I've seen stuff like this before layout. I think we're going to have a little bounce in the Momos, after the open today. Are we going to get back to scratch? I don't know. Square's down 11%. I don't know if it can. But, I think it can bounce a bit from $56. So maybe it washes up to 53 here. And just because it's ugly, it can get worse here off the open. But I think when we look and the dust settles here at 2 o'clock, 3 o'clock, I think a lot of these stocks are 10, 12% here today are going to bounce. That's just my thoughts on some of the moment stuff, but it's wild. So impossible to, call anything for certainty. So, just be cautious. But I'll tell you, my investment portfolio, I'm going to put a little bit of money to work today here. I've been sitting on an enormous amount of cash. We talked about, I raised a lot of cash, which wasn't looking pretty there for me for a while. I raised it back, and I can tell you the days I was raising cash. I told you on the show too. October 15th and 16th, I sold a whole pile of names out of my investment portfolio. Raised up like another 10% cash in my investment portfolio. We went down after that. I was feeling pretty good. And then we had that wicked rally at the end of October, November. We got back up to the area where I raised cash from, and I was like, vomit. I'm like, did I miss it? I didn't get my money put to work. I'm getting that chance this morning. Maybe we're going to get that 260 test to SPY, Joel. Maybe we bounce off there again, but I'm going to be trying to put some money to work here in my long-term investment portfolio today. The trading side is a debacle. I can't even, to try to figure out day to day. It's difficult right now, guys. Yes, I'm still doing good because I do a lot of the arbitrage, but I tell you, this morning, the arbitrage isn't even really working well. You've got stocks, trading down 10%. You've got the index down 1.5%. There's some catch up to do on some different things, but anyways, that's, for
nice wrap,
different style of trading.
Yeah.
But I think we have a lot of long-term investors out there. And I think on days like this is when you put a little bit of money to work. You don't put all your money to work, but you put some of it to work. That's the way I approach it.
All right, Dan, just looking at the pre-market low, 26.55, as I mentioned. I don't have a 4-star down to 26.33 1/4. 26.03 is the low of the move. But for right now, just keeping an eye on the pre-market low in the SPOOs as well as the issues. Dennis, thanks for that 6 minutes here.
Just to stay with you 1 second. I mean, look at this. Like SPY is down. The S&P, I don't like the futures. I don't like paying the quotes. 1.29%. The SPY is good enough. It's down 1.3%. Right, bloody Pfizer down 1%. I mean, it's not even really helping you. Johnson & Johnson's trading down 0.8% here. I mean, these are your defensive stocks in the in the index. And then when you start looking at what else is in there, I mean, how is it only down 1.3%? I think you can get that test at 260, Joel.
Okay.
Or the stocks are going to start ripping back. They're down. Some of them are down too much then. But it's not. The math isn't adding up here in the pre-market. The math does not add up. That's what I wanted to say. Is in the index and you look under the hood, the math is not adding up. Some of these defensive names are going to make up the difference. I'm going to see a wicked rally in the defensive names again, or you're going to see some of these Momo names bounce back, one or the other. That's my thoughts.
Something's got to give.
Something's got to give. Math has to add up. It will add up. I will tell you, it will add up at like 9:45. But it takes, the herbs are a little bit, cautious with their trading here too. But it's got to add up. So there's going to be some names that make up the slack, or you're going to see a bounce back in some of these things that are just annihilated in the pre-market.
Will today be the day 1 + 1 finally equals 5? We'll find out at the open.
That's what they're telling me in the pre-market.
All right.
Anyways, that's funny.
All righty. Well, and
that's a good name for we're titling the shows. It's today 1 + 1 = 5. It does in the pre-market. 1 + 1 is equaling 5 in the pre-market, Spencer. But I'll tell you, 9:45, 15 minutes after the open, that will not happen because all your herb bots are running and it will adjust.
All righty. And
1 + 1 will equal 2 about 10 minutes after the open. It depends on just how those ones work themselves out.
Okay. And on that note, we're going to wrap it up for the day. Interesting guest on the docket for tomorrow's show. We have Ian Weiner joining us. Ian Weiner has been on with us in the past. He was the director of equity trading at Wedbush Securities. He walked away from that job and has for the past year been traveling across the globe with his wife, doing a lot of charity work, and just sort of walked away from the street. We figured, the day before Thanksgiving, we thought it would be a light day. We didn't think this was going to happen on Thanksgiving week, but he'll be joining us tomorrow to talk us through to tell us what he's been up to for the last year or so, and I'm sure he's still watching.
He's a good guy.
I'm sure he's still watching the market. You can pull the guy out of Wall Street.
Oh, I talked to him. When you don't have internet, it's hard to watch the market.
I bet. All right. On that note, if you missed any part of our show, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just rewatch the show on youtube.com/Benzinga TV. Thanks to our guest today, Nick Chahine. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. That chat room is going all day, every day. And hope everyone has a good day. Be safe out there, and hope you join us again on Wednesday.